you guys. Hey, Travis.
Hello.
Welcome. So we've got several crypto pros here besides our usual Will, who you all know and love, but we have several pros who may be joining us in the coming weeks. And a couple of quick announcements that I want to make is, first of all, I'm going to start writing a newsletter to you guys, and I'm going to send out a newsletter, and I'm going to tell you every single coin that I'm invested in. So watch for that. And at the end of this month, most likely about the end of this month, we are going to move to our main hosting, and the way that your pros give you information being a membership site rather than Facebook. And there's a couple of reasons for that. One of them is just that it's more secure there. I mean, you guys, some of you know, because I think most, if not all of you, followed my work at takeactionforfreedom.com, which I put up in March of 2020, right? Before most of the world realized that our freedom was in jeopardy. Never imagined in beginning of March 2020, when I put that website up, that I would be diving into cryptocurrency as financial freedom. I was, though, at the time, buying my first cryptocurrency just as part of my preparedness. But we need to move there for a couple of reasons. One is that Facebook could deplatform us in an instant. And so what we're going to end up doing is that's where, since you guys are there anyway, I mean, I have 220,000 followers on Facebook, not including my personal page. And I've been able to talk 2% of them into coming over to Telegram. In 15 months, I've been able to get 2% of my followers to come over to Telegram. So people will gripe about Facebook, but they don't want to leave Facebook. And I kind of can't leave Facebook. That's where I built my career for 12 years, but that's my excuse. What's your excuse? So we stay on Facebook. You don't, I mean, in any war, you don't give up ground in enemy territory, right? Because people are always like, just get off of Facebook. And I'm like, well, you want to be there for sure. But we do need to be building on higher ground. So there are people who don't even want to be on Facebook, and they want to join us and they want to learn about cryptocurrency, but they don't want to do it in the public space, the public square that is the highly censored public square of Facebook. I personally intend to join Donald Trump's class action lawsuit that he just announced, and I have the evidence to show the harm to me personally and to my career of Facebook's actions. So I don't think they're going to like it that much, right? I don't think they're going to like it that much when I'm part of a lawsuit against them. So there's that, and there's the fact that just some people aren't comfortable. They're saying, we want to join your community and we want to learn about cryptocurrencies and we see the value of it and we don't want to be on Facebook. So for those couple of reasons, the professionals who support you here are going to primarily move over to the membership site, which I've been working on with my tech team, because we already have Memberium, which is the premier membership site. And we will still continue to have the Facebook group, and some people will join us who aren't necessarily, like paying members, but they're not going to get the good stuff that you guys will get every week in the newsletter that I'm about to start. And this kind of thing we will run from Zoom. So I want to just make those announcements that we have some new pros who will be joining us, because I haven't even told the Green Smoothie Girl subscriber list about this. I haven't even offered this to them. I just told those of you who follow Take Action for Freedom. And what we're seeing is that every day there's more people signing up, because you guys have heard the resistance to it. I mean, the resistance to cryptocurrency is huge. It makes me really sad, because I feel like I'm watching my boomer friends, dad. I mean, I literally told my sister, who's a new single mom and doesn't have a job and hasn't worked for 25 years. I told my sister and my dad, who is your classic boomer living on the communist system, right? That's what his military retirement is. It's communism. There's no like chest full of money to pay these retirees. We're on the hook for it, and there is no money to pay them. So, I don't tell my dad that you're living on the communist dole, because, he went to Vietnam and he thought he was fighting for our freedom. But I have told my dad, my sister, and my children, all my children have a birthday in the next 4 weeks. If you set up your Coinbase account, I will send you some money for you to buy crypto. Like, I don't know how much I'm going to give them. I don't know if I'm giving $50 or $500 or whatever, but I'm literally bribing the people I love the most to just get their freaking Coinbase account set up already, because they're not seeing the urgency of it. So good for you guys for being here. You're still early adopters, and you might be like, no, the early adopters were the people who paid $1 a coin for Bitcoin, not the people who paid $34,000, which is what you'd pay for it right now. Here's the crazy thing. You're still an early adopter. You are a very early adopter. It's not even 3% of the population of the world who owns a Bitcoin. And, you know, I was thinking today about all the reasons to be a crypto early adopter, and they range from political to the freedom people, to the humanitarians who are aware that there's 3 billion out of 8 billion people on the planet who don't have an identification card of any kind and are unbanked. 3 out of 8 billion people are so living on the fringes of society, and that doesn't even entirely cover the people who maybe do have an ID card, but they're migrant workers or sex workers or whatever. They're living right on the fringe of society, and this gives them the opportunity. Cryptocurrencies gives them the opportunity to live outside the banking system. And you gotta realize that it's a majority of the world that doesn't have access to a credit card. Okay, I doubt there's anybody on this call right now who doesn't have a credit card. And there's a whole lot of you that have never thought about the fact that over half the world can never get a credit card. And they get their pay and they have to drive to a bank 2.5 hours away to get their cash. And in the time they have to spend their cash, it may have lost 10 or 20% of its value. And loan sharks took 10 or 20% of it. That's the level of poverty that most people are living in. And that's one of the exciting things about being involved in cryptocurrency, is the humanitarian aspect of it. You know, and then there's people who are just in it for money, and there's nothing wrong with that. Okay. And I was trying to like figure out, well, why am I in it exactly? I kind of touch all those. I care about all of them. I'm an Aquarian. I care about the humanitarian aspect. I care about helping the people of the globe. By the way, welcome to Hurricane Elsa. There she is. Hasn't been too bad. It's my first Florida hurricane. I don't see what the big fuss is about. But I think there's probably a bunch of you who can relate to all those aspects. For me, it's not about the money. Like I'm going to talk to you a little bit about making a case for Bitcoin and comparing it to different asset classes, because I've done a lot of soul searching as I am looking at liquidating, and I am actively right now. I have 2 real estate closings this week, and I had 2 real estate closings last week. I am actively liquidating my net worth into cryptocurrency. And, you know, one way you could look at it is when I go through what we're up against with all these other asset classes, it's kind of a bad argument. You could come to the conclusion to get into cryptocurrencies because everything else is so problematic, right? It's not the best argument, but you're going to hear what I have to say here, and you'll see why that is an argument. That the things that we've always thought of as the best stores of value are really poised right now to fail us. So we're going to be moving to a membership site so that Facebook is not the main way that we support you and educate you around here as we move forward. And there's several pros on here who have been supporting people in their journey to cryptocurrency, who feel as passionately as I do and Will does about that. One of the best things that we can do, one of the best ways that we can show up in the world right now, is help people get over their mental hurdle. I mean, people say, well, what if they take down the power grid? Okay, guys, if they take down the power grid, remember, they now have no more way of sliding dollars out of our pocket. Which, if you understand the agenda of the globalists, they kind of need the power grid to slide the money out of our pockets, right? And also, if the power grid goes down, you're going to be worried about things far more fundamental than your access to your cryptocurrencies. So you're going to hear people say that. You're going to hear people say that it's a scam. You're going to hear that a lot. See, when people say it's a scam or it's a fad, that's how you know that they don't actually know anything about it. And so it's a great opportunity to say, hey, I've got a webinar to show you. Why don't you listen to the webinar and see if you still feel like it's a scam? All you need to do is tell them that their dollar, that the federal government of the United States stole 24% of their money last year. Isn't it astonishing that the United States government, which isn't really the United States government, right? It's some people control them, stole 24% of your hard-earned dollars last year, and hardly anybody knows it. Hardly anybody knows it. Most of the people you know have no idea. They know that they like read headlines that say that like the price of lumber has gone up and that groceries are more expensive. Is it not astonishing that they got away with stealing a quarter of our wealth last year? Because that's what happens when you add 24% of money to the money supply, is it is the exact same as stealing 24% of your money. And this year is going to be worse. So we don't really have a choice. And so that's the thing. If you want to get somebody's attention, I think that's the thing, that even if my dad is like, oh, you cute little pumpkin seed, you doing this silly technical thing. Dad, your retirement is in trouble. You lost 24% of your money last year. That's the thing that you can tell people to help them. It's not going to take one touch or two touches or 5 touches. It might take 10 touches. It might take 10 touches before people are really willing to take action. I mean, heck, I've been bribing my family and saying, I'm going to give you money inside your Coinbase account for your birthday, kiddo. And none of them have set it up yet. So we have to stay in there and we have to stay patient with people. And every day more people are joining that we told about this group 3 weeks ago. And I think it's because it's so foreign. So congratulations to all of you for getting this far. Asset classes, okay? You're going to see a lot of people fail at investing in cryptocurrencies. And I feel like if all we did every single week is just steel you against the FUD, fear, uncertainty, and doubt, if all we did every single week is find new ways to keep your feet on the ground, we would be doing you a great service. And so the professionals who support you in here and they do the phone calls with you and they do these weekly calls and do your Q&A and all of that, I don't think there's anything that we can do that's more important than keeping you grounded in first principles and reminding you what it is we're exactly doing here, okay? I'm not here to teach you how to day trade. I think day trading, no matter how much you know, is likely to cut the other direction and cost you money. Like you need more ways to lose money, thanks to the United States government, right? So I'm really more interested in the HODL strategy, hold on for dear life, the true investment principles. Like you're investing it today and don't look at it if it stresses you out. If you're tempted to click, my money's gone. Okay, if you're tempted and you bought the Bitcoin or the Ethereum or the Polkadot or whatever it is for the long term, and you see it going down and you start to feel that uncertainty. And if all we do here every single week is tell you there's going to be some ups and downs, there's going to be bear markets, there's going to be bull markets. This is a volatile space. But here's my thoughts. Let's start with altcoins. I was going to do that last, but I am not a Bitcoin maximalist. Have you heard of a Bitcoin maximalist? Anybody? Okay, this is like Michael Saylor. And there's others where they say if it's not a Bitcoin, it's a shit coin. Okay, have you seen people saying that? I don't agree with that. I personally think that if you're coming out of significant assets, if you're liquidating assets like I am, you might want to take a look at Bitcoin. And the reason is that if you look at the altcoins, let's just forget about crypto and let's just talk about investing in general. You guys ever watch Shark Tank? Anybody? Okay. You know what those guys are called? The sharks? They're venture capitalists, right? And a venture capitalist, they're looking at your small business, okay? Because small business can't do an IPO. They're just getting off the ground. They don't have any money. They've just got an idea. They've got a product. So a venture capitalist comes in and says, what you're doing is super risky. And so I'm going to take you for an obscene amount of money. I'm going to have an obscene amount of stock in your company. I might even have controlling amount of stock because I'm going to invest in you knowing that you are terribly risky. Now, here's the thing, you guys, 99% of ventures fail. And I don't want to be negative, but I also don't want anybody who hears what we have to say and goes all in on one voice or one piece of strategy or whatever, and they do something super crazy risky and they didn't realize how risky it was. What you're doing, if your entire portfolio is these little altcoins, is that you are gambling. And you are engaging in behaviors that are more speculative than anything else. If you consider that 99% of ventures fail, and in fact, 95% of the S&P right now, the big, huge public companies, have not been performing the last 10 years. They're dinosaurs, but they're propped up by the system that they're in. If you take a good cold hard look at that, then if you go all in on the altcoins because you're just really hoping that that 36-cent coin that you buy is going to go to $15,000, and you are just falling asleep at night imagining yourself becoming massively wealthy in a year, that's what venture capitalists do. And they win sometimes. But you know what they do is they invest in 20 companies and they know that 18 of them are going to go bankrupt. You understand that, right? 18 out of 20, 19 out of 20 startups are going to fail. Venture capitalists, like the sharks on Shark Tank, invest in these companies because they're really hoping for that 1 or 2 out of the 20 that goes to the moon. So if you guys do that, I have no criticism of you. This is not about, you know, people who go in on all in on altcoins and they blow off Bitcoin are wrong or bad. That's not what I'm saying. I'm saying be aware of the fact that what you're engaging in is very risky. Okay. If you've never saved before and you've been a person who just kind of spends what you have coming in, and investing in general is brand new for you, all I ask, please know what you don't know and learn everything that you can and listen carefully and take notes. Because if you are falling asleep at night imagining of getting rich quick, just know that there are choices within the crypto world that are far less risky. Okay, it's one in 100 companies that are still in business over 10 years after they start. It's 1 in 100. How long has Bitcoin been around? Anybody? I could see a few of you.
13, so 8 years.
Yeah, 12, 13 years. So they've achieved critical mass. There's 5 billion people who own Bitcoin. They're kind of untouchable right now, and they know who they are. They aren't trying to have 16 use cases. They aren't trying to be all things to everybody. They are digital property. They are possibly the best store of value that we've ever seen in our lifetime. And you might be thinking, wait, I thought you said you're not a Bitcoin maximalist. I'm not. And I am invested in 10 other coins. And I know that those 10 other coins that I'm invested in are speculative, and they might go to the moon, and they might make me really rich, and they might help me do all the humanitarian work that I want to do for the rest of my life. And they also really might go to zero. So what I want is, you know, you hear people say, you've heard it, like, don't invest what you aren't prepared to lose. Are you? Are you prepared to lose it? Because people hear that and they're like, well, yeah, easy come, easy go. Like, it was just, you know, I just invested $75 every paycheck or whatever. Will you be suicidal if you do lose it? You better prepare yourself right now if you're going to engage in the most speculative behaviors to lose it. Okay? Roll the dice big. Go for it. I'll be cheering you on. You didn't do that because of my advice. But I hope you win. I hope you go to the moon. I hope all your coins go to $1 million a coin. I really do. But there is just a lot less risk with Ethereum that's 6 years old. They've already crossed a lot of hurdles. They've developed a team that is apparently still working. They're still around, and they're building the number of partners that they have. Ethereum still has to cross a lot of hurdles. I kind of go back and forth on Ethereum. I don't have a ton of Ethereum, but I debate myself constantly about it. I'm not going to pretend to you like I know what I feel like I should know about Ethereum and Ethereum Classic, right? There's a lot of complexity there. But I'm pretty high on Bitcoin for somebody who's coming out of significant amount of net worth and you need a place to put it that you feel confident in, that you can sleep at night. So you compare, let's talk about gold and silver. First of all, people who are super bullish on Bitcoin are always going to point out to you that there's no market cap on gold. If the price of gold gets high enough, what does the free market do? It starts investing in more and more gold mining. And there's gold all over the world. And you know, historically, they increased the gold supply by about 1.8% per year. So Bitcoin wins in that there's a 21 million market cap. And I really can't overestimate what a big deal that is. That there is no possible way that there can be more than 21 million coins. That's a big, huge deal. No corrupt entity can come in and make more or counterfeit it. I think it's a huge deal that if you're hodling gold and silver, somebody's not going to knock you off for your Bitcoin, whereas they will knock you off and have throughout history for hoarding a lot of gold and silver. Okay. It takes up space. It's super heavy. You can't travel with it. You know, we're dealing with these issues because we're in between Utah and Florida and we're moving and we have these pointless, long, stupid conversations about those couple boxes of silver, right? Like, where do they go? What do we do with them? How do we get them there? Another thing about Bitcoin as an asset class that's never happened before in the history of the world is it's so portable. I can use it anywhere in the world for so many different purposes. That's not the case with real estate. So let's mention real estate. I've mentioned to you before that I took money out of my business. 16 months ago, I saw what was happening and I was like, I don't want to be manufacturing this and this and this, especially with all the supply chains being abroad. I want out of my own dang business. And I'm not sorry. I looked down the road and I could see strategically, bad idea to be in some of these business activities I'm in, got my money out of it, put it in. What did I put it in? It's supposed to be the best store of value, right? People will always tell you, people gotta have a place to live, right? Put it in real estate. So what's happened in the last year? You guys know what's going on with real estate?
It's getting ridiculously expensive.
It's getting ridiculously expensive because of inflation. Okay, so people think that their house is worth 25% more. It had to go up 25% to break even. Okay, so everybody thinks they're loaded because their house is worth more. We have to factor in the inflation, but also landlords like me are getting handed COVID letters. I don't have to pay my rent because Joe Biden and the US legislature told me that I just have to give you a letter that says the word COVID in it and I don't have to pay rent. There have been people who haven't paid rent in over a year. Do you guys know that 20% of America is behind in their rent? Help me understand when they catch up. When do they catch up paying their rent? So then you're thinking, well, wait, what are all the landlords doing? Well, there's also 10 million Americans who are behind in making their mortgage payment. So I'm not saying that real estate isn't a good store of value. I'm saying it's really, really stressful to be a landlord right now. I've gone from, I have tenants a year ago who gave me a year of rent up front because I gave them a discount if they did. And now they don't have 3 months of rent to pay me. Okay, I'm sorry, but I'm watching those signals and that spells trouble to me. And so I'm selling real estate right now, even though I used to think of it as the most low risk thing I could do. Gold, silver, they kill you for it. It's hard to store. It's hard to move it. It's hard to sell. There's no network. Thing is about Bitcoin is it's not just a great store of value with a market cap of 21 million. It's also a network. There's no gold and silver network. There's just a bunch of people out there selling it for a commission. So stocks, the US stock market has never been so inflated. Like I said, 95% of the S&P are dinosaur companies that are going to be highly disrupted by blockchain technologies that are coming out. And they have been massively underperforming for 10 years, but due to a complex set of circumstances, Mostly that when inflation starts going crazy, the stock market always goes up, but it's only temporary. So you could never convince me to buy into the stock market right now. There are people, generally people who make a living, right, selling the stock market, who are saying it'll go up more. And I would argue too that real estate may continue to go up. My guess is that the mortgage bubble will burst first. I don't know that it's going to be a crash in price. I think there's already a softening. I'm already seeing it. There's a softening in the real estate market. People aren't fighting over properties like they were. So inferior to stocks, bonds, this is the worst time in the history of, at least in the history of my lifetime. This is the worst time ever to buy bonds, okay? And it's poised for when the interest rates go up, even by 1% or 2%, the bond market is just dead. People who own bonds are very stressed right now. Real estate, we've talked about that. Gold, silver, these things have a utility, and that's supposed to be a good thing. But you know what? If the price of gold goes high enough, people start mining for more gold and mining for more silver. And if the price goes even higher than that, people start melting their jewelry. And this has happened throughout history. And that keeps gold and silver prices from going crazy. Whereas your cryptocurrencies might just go crazy. Because I personally think as more people figure this out, it's going to be a flood of people coming into cryptocurrencies, especially the most stable ones like Bitcoin. So I really just wanted to talk to you about getting really clear with yourself on what kind of investor you are. And if you're an investor who investing is new to you and you don't have significant net worth that you're bringing to the party, and that you're making very difficult decisions about what to do, we are never going to tell you liquidate your 401k. I know that I told you, I almost wish I didn't, because just because I told you that I liquidated my 401k doesn't mean that I think you should do that. I only think that you should do that if you decide you want to do that after considering a variety of complex factors that make you you, okay? And you decide what kind of investor you are. If you're a go for broke, I just want to roll the dice, I want to see if I can shoot to the moon, taking a lot of risk, then get those altcoins. And you know what? It's not high risk and low risk. It's not like Bitcoin has no risk. And it's not like altcoins are necessarily, a startup that just got started 3 months ago either. So, there's a variety of factors to consider. And I think one or two of you guys need to mute yourself. We will take classes in a little bit, but there's somebody with some little ones who just hit that mute button. But I think I wrote down a few of the things that you might not think about unless you own a small business. So these are the kinds of things that I think about. And you can't just take a look at a coin and look at its use case and leave it at that. I want you to be aware that these are the things that small businesses are up against right now. They are in a more highly regulated environment than the United States of America has ever seen before. Just us starting this little crypto education business, which is a pretty simple business model. And we had the staff, the software, the skill set, we had everything we needed. It was the hardest thing I've ever done in terms of all kinds of regulation issues. Nobody wants to take on a new client when it comes to insurance. Nobody wants to take on a new client when it comes to merchant processing. So everything is harder right now. Everything is harder here than I've ever seen it as 35 years as an entrepreneur. So they have to cross hurdles like marketing their coin. Okay, don't forget that these coins don't just get out there and become known by magic. There is a lot of money and a lot of time spent over the course of a time span for that coin to get to critical mass where enough people know about it and it starts to, be a boulder rolling down the other side of the mountain. It takes a few years for that to happen. It's a lot of effort and a lot of spend and some money, raising some money, staffing. Okay. What if sometimes the top executives have a big war and they're duking it out and they're in court for years? That can really hurt a company, especially a startup. Someone comes in behind them and does it better. Some other startup comes in and solves the problem that they've been struggling with in their code right out of the gate. Gas prices go through the roof. This is one of the reasons I'm a little bit conflicted about Ethereum, because some of Ethereum's partners, because soaring gas prices make it expensive to use Ethereum, whereas Solana, a couple others of its competitors use different energy sources. So when gas is rationed, I truly believe that gas will go through the roof and it will be rationed. We've seen it before. I've seen it in my lifetime, you guys. Those of you who are younger than me, you might not know, like that's happened in my lifetime. And I was pretty young. I was in late elementary school when there was actual gas rationing, but it's happened in many, many countries of the world. One of the biggest things for me is regulation. So I'm not trying to talk you out of the altcoins, you guys. I'm just trying to make sure that you are aware of the level of risk there is. And I think regulatory risk might be first and foremost, because, you know, when you're Ethereum or one of its competitors and you're stepping into all of these use cases, you are inviting regulation when it comes to intellectual property regulation, banking regulation, money transfer regulation, commodity regulation. We live in a very, very socialist culture, regardless of what you've been told. So just some things to think about. I'm not dissing altcoins. I'm invested in them too. But, you know, a lot of really great investors out there say, if you want wealth preservation, you know, you want to be 60 to 80%, leaning towards 80% Bitcoin. And Ethereum is very, very tied to Bitcoin, but at least Ethereum has crossed a lot of hurdles and has many important use cases. But I like XRP. I like Monero. I like Pirate Chain. I love the idea of them. I'm an entrepreneur at heart. I'm not gonna sit those out. Some of them are just great ideas and great projects, and they've gotten this far. And you know, I'm not necessarily the earliest adopter. I'm not the one who comes in when it's 6 cents, but I might be the one who comes in at $1.50, right? So I'm still super bullish on XRP and some of these other coins. So I've talked a lot, just making sure I didn't miss anything, but I will really quick here for those of you who want to hear the coins that I am invested in. And when we get to the last one, I'm going to tell you anyway, even though I wish I hadn't bought this one, but I bought it early and I didn't know what it was. Okay, so we are all very vulnerable to doing something just because everybody's doing it, and then we wish that we had done our homework later. So you ready for it? Here's the ones. I did this off the top of my head and I might be missing one or two. Bitcoin, Ethereum, XRP, Monero, Pirate Chain, Cardano, Polkadot, Theta, and wait for it, Doge. Okay, not telling you that because those are the ones that I necessarily think you should do. Wish I didn't do the Doge. I told John, as soon as we can get our money out of it, as soon as it hits where it was when we bought it, let's get out of that one. But anyways, those are mine. I will, before I send the newsletter out, I will check and see if I missed any. Those were just off of the top of my head. But I know that Will has some great stuff for you. I know he's actually going to feature some of the more major coins. He's been sharing some of the like altcoins, the smaller ones, the ones you might not know about, but he's going to talk a little bit more about those. So sorry I went a little bit long tonight. Watch for a newsletter. We are going to grow in numbers massively at the end of the month and into August. So stay tuned for that, and stay tuned too, because if we all disappear on Facebook or we're not as lively on Facebook and we go over to the new membership site, make sure you don't miss that. I just wanted to give you a heads up about it. So thank you so much, and I'll see you guys soon.
Well, hello everybody, and welcome to this week's live Zoom meeting. Obviously, this is a recording. We had some technical difficulties yesterday. During the live Zoom, my internet went down, and I couldn't get it up again to complete the meeting. So this is just a recording of my section of the live meeting that we had last night. So I will post this separately in combination with what Robin did on the webinar last night that recorded on Zoom. So we'll do a combination of the two. So let me get started with this. Before I start, I do need to remind you that I am not a financial or investment advisor, and none of the information I share in this presentation should be considered advice of any kind. I'm simply an enthusiast sharing my knowledge and experience to help you on your journey into crypto. So my first thought for this week is, what the FUD? Now, if you remember or have gone through all of the guides, you'll remember that in Guide 5, Carl spoke about FUD, fear, uncertainty, and doubt. And I wanted to pause on this topic for a bit this week since it, meaning FUD, is becoming more and more prevalent and common these days, with horrifying news headlines for crypto flashing all over the place. So I wanted to show you how mainstream media and even influencers use this strategy to grab your attention and what that means for them, and ultimately for you, the investor, and for crypto as a whole. So I'm sure that by now, as you're getting more and more involved in crypto, doing your own research, and getting more interested in how this new and exciting world works, you've come across all of these scary and attention-grabbing headlines that just makes your head feel like it's going to explode. And just looking at some of the headlines on the screen, Bitcoin barrels into a death cross as backdrop darkens, and crucial crypto news with flashing red lights and arrows, and should you worry about crypto crashing, and Bitcoin get ready for a whale of a crash. You must be feeling like the poor guy in the middle of that screen and just want to rip your head off. Now, it's important to realize and understand that FUD is just a psychological trick employed to spread doubt and fear among investors, causing a drop in the price of a certain token or a coin. So if you think about it objectively, you'll begin to see that fear has now become the main currency used to control the crypto market. So FUD almost always starts ramping up when the markets start going through a bull cycle, or when they're on the up. So as the price of crypto rises, the market very quickly gets divided into two camps. On the one side, you have the investors who think that the price will just remain on the rising path that it's currently on. And then you have those on the other side who are afraid that the price is overvalued and a crash is imminent. Now, FUD is also very often and very successfully used to manipulate the market, to the advantage, of course, of certain classes of investors. Some celebrity or well-known personality, we won't name any names, will open their mouths against a certain currency and a huge sell-off ensues. The powers that be foresee this action and quickly sell off their stakes in that specific coin, waiting for the price to drop again to buy right back in and wait for the rise in price again, just to regain more profits. Now, some of the more popular topics that FUDsters like to use in their headlines include partnerships falling through, false rumors or misinformation or fake news, any restrictions imposed by countries like China, like they did with the Bitcoin mining, incorrect technical analysis, and even price predictions, whether good or bad. Another very important aspect that you need to remember about news agencies and even YouTube influencers, they are all competing for your attention. They need to make sure that you not only see their article, but actually click on it and read it in order to get a click, because that is how they make their money. Most of the time, the content won't even match their headline, but they've been so successful in employing this strategy that it doesn't even matter. They get people every single time. So how do you avoid getting sucked in? Guide 1. Remember, steady your mind and manage your emotions. And, of course, have a plan. We spoke about that in Guide 1 as well. If the price of one of your coins drops drastically, is your plan to hold or to sell at a specific percentage drop? Remember, the plan is personal. You decide what that plan is. You just need to have it in place to know when to execute it. Know what it is and when to implement. Always remember, when a coin's value drops dramatically, it might be wise not to sell immediately and just wait for the volatility to blow over and wait for consolidation on the price for a while. Whatever your personal plan is, though, that you want to set out for yourself, know when to implement it when the markets go a little bit crazy. So, as Robin mentioned in her half of the webinar, I did want to kind of go back to basics on the two coins that I wanted to discuss this week. And I want to look at one of the two most well-known coins, Bitcoin and Ethereum. So I'm going to start off with Bitcoin. Now, contrary to popular belief, I don't hate Bitcoin. I know that we have spoken a lot about altcoins and their potential, but it's also important to consider the value locked up in the king of cryptocurrency, which is Bitcoin. Now, what is Bitcoin exactly? So, it was launched in 2009, and it's generally considered to be the first cryptocurrency. So, it's a decentralized form of digital money, if you will, that eliminates the need for the middleman, like traditional banks or even governments where financial transactions are concerned. So, it's a payment system or a payment network. Now, you see, fiat money, like the dollar, is always backed, supported, and regulated by the government that issues the certain currency. Bitcoin, and most cryptos that have come since, is managed through a combination and network of computers called nodes. So it's a true peer-to-peer network technology with no central control authority. These transactions are managed by software-driven cryptography, which, of course, is the science of passing secret information that can only be read by the sender and the receiver. That really makes it, and all crypto, backed by code rather than something that holds a physical value like gold or silver or a fiat currency like the dollar. Now, Satoshi Nakamoto, the mysterious and anonymous creator and inventor of Bitcoin, wrote the following in the white paper introducing this new open source technology. So he said, "What is needed is an electronic payment system based on cryptographic proof instead of trust, allowing any two willing parties to transact directly with each other without the need for a trusted third party." But Bitcoin has come a long way since then, now accepted as payment by a long list of companies and organizations like AT&T and Tesla, becoming a recognized currency in El Salvador, and also becoming the largest and most valuable crypto on the market. Also having an exceptional store of value for people that have accumulated a lot of wealth over the years of their life and want to store it in a place where it will hold value. Bitcoin is excellent for that. Then on the other side, So how does Bitcoin work exactly? Well, a public ledger records all Bitcoin transactions performed with a copy of each of these transactions being kept on servers scattered all over the world. Remember, I said that it is decentralized. So anyone can essentially set up one of these servers with just a spare computer that will be known as a node. Instead of a central controlling authority deciding who owns what coins, consensus is rather reached cryptographically across these nodes in the Bitcoin network. Every transaction is publicly broadcast onto the network and shared between these nodes. Now, roughly every 10 minutes, these transactions are collected together by Bitcoin miners into a group called a block and added permanently to the blockchain. So this essentially is the definitive account book of Bitcoin. So as we've discussed in Module 3, similar to how you would keep traditional coins in a physical wallet, cryptos are held in digital wallets and can be accessed from apps on your phone or a range of online and hardware tools. So, what are the pros and cons of owning Bitcoin? Now, let's start with the pros. Bitcoin provides the ability to avoid the use of a traditional bank or a government agency. It also has the potential for big growth, since many investors believe after it reaches maturity, greater trust and more widespread use will follow, which will obviously make the value go up even more. It also allows for private, secure transactions with fewer fees. The one important thing about Bitcoin and crypto as a whole is that you can transact in it 24/7 from anywhere in the world, and transactions do not contain personal information like a name or a credit card number like in traditional finance. So the risk of possible identity theft is much less. Now, what are the cons on Bitcoin? So Bitcoin is limited, although growing in use. More and more high-profile corporations and companies are adopting Bitcoin as a form of payment, which will speed up larger-scale adoption from the public and increase the value of the currency. Bitcoin, or just crypto in general, are not protected by the SIPC. Now that's the Securities Investor Protection Corporation. This organization insures investors up to $500,000 if a brokerage fails or funds are stolen. But crypto is not covered by this fund. And lastly, it is, just like all crypto, extremely volatile. So it's just something to keep in mind. Next up, we have Ethereum. Now, if Bitcoin is considered the king of crypto, then Ethereum can possibly be seen as the prince of crypto. It's the second largest cryptocurrency in market cap or market share. Ethereum is essentially a technology that's designed and built in such a way as to facilitate the use of digital money, global payments, and applications. It's open to everyone, wherever you are in the world, and all you need is the internet. It's a technology that allows users to send crypto to anyone in the world for a small network fee called the gas fee. It also powers applications that everyone can use and no one can take down, called dApps or decentralized applications. Now, according to the ethereum.org website, Ethereum is the world's programmable blockchain. So that is their claim from their website. Ethereum has successfully built on Bitcoin's innovation with a ton of differences and upgrades. Both Bitcoin and Ethereum let you use digital money without payment providers or banks. But Ethereum is programmable, so you can also use it for lots of other different digital assets. One of the biggest advantages of the Ethereum network is the smart contract technology that it employs. Now, a smart contract is a program that runs on the Ethereum blockchain, so essentially a type of Ethereum account. Now, this means that they have a balance and they can send transactions over the network. The big difference, though, is that they're not controlled by a user. Instead, they're executed on the network and run just as they have been programmed or designed. So users can then execute transactions via this smart contract, which will then manage the transaction according to the program that the contract was designed according to and provide a certain result. Perhaps the best metaphor I came across on the ethereum.org website for the smart contract technology is that it works like a vending machine. So with the right inputs, a certain output is guaranteed. So to get a snack from a vending machine, you put in money, you make your snack selection, and voila, your desired snack comes out at the bottom. This logic is programmed into the vending machine. So then a smart contract, very much like a vending machine, has logic programmed into it. So people submit a transaction to a certain smart contract with a predetermined selection programmed into the transaction. Based on the transaction and the program, the contract is executed and the desired result is obtained. So just like how a vending machine removes the need for a vendor employee, smart contracts can replace intermediaries in many industries. Most of these smart contracts are executed through dApps or decentralized applications that get built on the Ethereum network and functions almost like a pretty front end to that contract. So dApps make it possible to initiate these contracts from your phone, adding convenience, and obviously minimizing the need for intermediaries like banks or governments. So in the interest of time, I only did 3 news headlines for this week, since Robin and I both shared some time on the webinar. So going into the news for the week, first up we have Ethereum that outperforms Bitcoin as the sentiment around crypto improves. So for the most part, crypto in general were higher today, or yesterday, Wednesday, as bullish sentiment across the market improves very slowly. So Bitcoin is currently trading in the mid 34,000 range. I think it's 34,700 or so at the moment. Still down 1% from last week though, whereas Ethereum is trading 3% higher than Bitcoin over last week, outperforming Bitcoin in the current market. Goldman Sachs published a report on Tuesday stating that Ether's use cases currently possesses the highest potential, being the most popular development platform for smart contracts. Now, amidst a relatively quiet trading environment this past month, there are indications that institutional investors are busy accessing cryptocurrencies as an alternative to traditional assets. Now, Florian Genes, Associate Director of Quantitative Research at Wisdom Tree, in an article on Tuesday was quoted saying that we have seen more large institutions inquiring about the space, including large banks and asset managers, as well as pension funds and even insurance companies. Most of these institutional actors are still very early in their journey to get the green light to start investing in Bitcoin, but this shows large institutions are keeping their eyes open. Just another reason I wanted to cover these two coins in today's call, to show you the value and the potential that these two giants in the crypto world hold for eager investors. Next up, crypto-based cards prove lucrative for Visa. Now, Visa's crypto-related cards have clocked in a staggering $1 billion of spending activity just in the first half of 2021, as stated in a company announcement yesterday. Now, it needs to be noted that the $1 billion mark isn't entirely made up of consumers spending cryptocurrency. Some of these transactions are related to fiat accounts that result in crypto rewards, but some are indeed crypto in transactions. Now, unfortunately, no breakdown of this split was provided. Visa's crypto card program is part of a larger goal that Visa has to merge the crypto world with traditional banks, including adding stablecoins to Visa's payments network and plugging banks into cryptocurrency buy and sell features. Now, Kai Sheffield, head of crypto at Visa, was quoted saying, "We think the first piece of this is being the bridge between the crypto wallets and our existing network of merchants. Then, the next part is making it easier for our clients to issue and interact with these cards with things like being able to settle USDC. Then we are starting to spend a lot of time around how Visa can be a bridge between our existing network, our financial institutions, and the crypto ecosystem. Visa powers both cards that allow consumers to easily convert crypto to fiat and spend it, as well as cards that allow them to spend fiat money but earn crypto rewards. Now, the large-scale adoption of these crypto programs from one of the world's leading credit providers is extremely encouraging for the crypto space as a whole, as it's basically assisting in bridging the gap between the current financial environment with the crypto world. So both Crypto.com and now Coinbase offer crypto Visa debit cards through their exchanges that can link to your portfolio on each of these exchanges, where you can then use your debit card to pay for goods with it being taken out of your crypto holdings instead. And then lastly, an indicator suggests that Bitcoin price consolidation may just be nearing the end. Now, bear with me here. This might get slightly technical, but there is an indicator that's suggesting that Bitcoin may soon move out of its 7-week trading range of $30,000 to $40,000. Now, this indicator tracks the cyclical nature of price volatility, suggesting a big move is overdue. So the indicator is called the Bollinger Bandwidth, a measure of volatility calculated by dividing the spread between the Bollinger Bands by the 20-day average of the cryptocurrency's price. Now, I told you it was going to get technical, so just bear with me. This indicator now shows that the Bitcoin price has declined to a 2.5-month low of 0.15. Now, Bitcoin saw big moves in December and April after the bandwidth fell to 0.15. Now, essentially, Bollinger Bands are volatility bands placed 2 standard deviations on either side of the 20-day average of the price. Now, as you can see on the screen, this is what the Bollinger chart looks like. And you can see at the bottom the two price breakouts that was referred to in December and April when the bandwidth reached 0.15, where it is at the moment. Now, Bitcoin dropped from $60,000 to $48,000 after the Bollinger bandwidth dipped to 0.15 in mid-April. A similar reading in December paved the way for a bullish breakout from the multi-week price consolidation below 20,000. Now, it's important to remember that moves signaled by the Bollinger bandwidth are what is referred to as direction agnostic, as history shows. So that just means that the anticipated change can be bullish, so it can go up, or it can be bearish, it can go down as well. The upcoming unlockings of grayscale and blockchain data pointing to renewed buying by wealthy investors indicate that this time the move is more likely to be bullish, which is extremely good news. The upside is expected to gather steam above the 50-day moving average resistance, currently at $36,000. Bitcoin is trading near 34,700 at the moment, representing a 1.6% gain on the day. So good news for Bitcoin, and it will be a good news for crypto in general if the Bitcoin price goes up. And that brings me to the end of this week's webinar. It's been a short one. I just wanted to make sure that we have enough time in between for Robin to have her presentation as well. So I hope you enjoyed the information. I look forward to sharing more with you in next week's webinar. Bye-bye.